We brought you interviews with both the CEOs of Confluent and Doximity yesterday as they made their public debuts, both popping on those opening trades. This morning, CNBC.com's Ari Levy profiling some of the big winners as trading began, notably for Silicon Valley VC firms notching billion-dollar wins. Ari, good morning. A few of the names, at least, not surprising.
Not surprising at all. Benchmark and Index are a couple firms that have been working together for a long time. Each notching billion-dollar gains in Confluent. Emergence has been a huge firm in enterprise software, billion-dollar plus gain in Doximity. The other one, Interwest, which got in early in Doximity, that's not one you hear so much. They tend to get in early and don't tend to hold huge stakes by the time companies go public because of dilution. But because Doximity raised so few financing rounds, Interwest actually was able to hold a large enough stake throughout to have a billion-dollar stake at the time of the IPO.
Ari, what's your take on how this worked out for, yes, those early investors, but then for later investors, too? I know you were looking before these stocks started trading at what their expected market caps would be and sort of how the valuation shook out. It seems like Confluent, in a lot of ways, was priced a lot better than Doximity, right?
Yeah, Confluent was priced tighter. I think it was pretty evident going into that IPO that it was a better-known name, certainly among the larger investor base. They sort of priced for a typical pop, in the 20 to 25% range. Doximity hasn't raised capital in 2014. It's not a name that's particularly well-known in Silicon Valley, despite being based in San Francisco. And they've done very little marketing. It's basically a product that's known by the medical professionals and very few other people. So I think the thinking there was a pop does benefit them because it gets them a little more coverage, and it shines the spotlight on them a little bit as well. Additionally, they reserve 15% of their stock for the IPO stock for doctors, so they were able to make quite a bit of money for the doctors who got in at the IPO price as well.
Right, and the CEO telling us, Ari, that he was glad for the pop because part of that went to those physicians that were able to get some allocation of the IPO. Ari, what was noticeable to me was some of the names that did not actually cash in or make a lot of money on the backs of these IPOs, names that have been such active players this year, the behemoths in the space, SoftBank and Tiger Global. How did they miss out on these ones? I know that Doximity hasn't raised money since 2014. It's a long time ago in private market world. But what did you make of that?
Yeah, believe it or not, Tiger Global can't get in on every single IPO today. Yeah, it's
shocking.
Every company operates a little bit differently. There has been a trend in the last few years to raise these huge pre-IPO rounds, which has been massively beneficial to Tiger Global because they're able to basically double, triple their money oftentimes in just a couple years. But not every company needs that kind of cash infusion heading into the IPO, and there are some management teams out there that actually prefer to limit dilution, hold on to a fair amount of the company for themselves and their employees, and not spend like crazy. And Doximity is certainly in that category. I've spent a fair amount of time talking to Doximity CEO Jeff Tangney, as you did yesterday, just about their cash conservation and their approach to this. And it's very, very different than a typical software company.